Imagine missing out on the internet boom in the 90s. Imagine skipping Amazon stock when it was just $5 a share. Those opportunities changed lives, creating generational wealth for the people who recognized them early. Now ask yourself, what if another opportunity of that magnitude is happening right now? Bitcoin, love it or hate it, went from 5 cents to over $50,000 a coin in just over a decade. A $1,000,000x return. Nothing in financial history comes close. And here's the kicker. Many experts believe that we're still in the early chapters of this story. So the real question isn't, did I miss Bitcoin? It's, how can I position myself for what happens next? Let's put Bitcoin's performance in perspective. In 2010, one Bitcoin was worth less than a penny. By 2021, it hit $69,000. Even with its notorious volatility, it remains the best performing asset of the last decade by a staggering margin. The numbers are almost unbelievable. Over 20 million% total gain since 2011. To put that in perspective, a $100 investment in Bitcoin in 2011 would have made you a multi-millionaire today. The S&P 500, historically considered an excellent investment, returned about 260% during that same period. Gold, around 25%, and real estate, about 75% nationally. Nothing else comes close to Bitcoin's performance. Not stocks, not real estate, not private equity, nothing. But here's what's really interesting. Despite this incredible track record, Bitcoin's total market cap is still just a fraction of gold, real estate, or the global stock market. There's still enormous room for growth if adoption continues. Let me tell you a quick story. My friend Tom laughed at Bitcoin in 2015 when it was $1,000. He said, it's just digital drug money. And in 2017, when it hit 20K, he regretted missing out and bought at the peak. Then panicked and sold it when it crashed to 4K in 2018. And he swore off Bitcoin. But then in 2020, it started surging again. By 2021, it broke $60,000. And Tom finally did a deep dive. He realized that Bitcoin isn't just some fad, it's built on sound principles, like limited supply and decentralized security. So Tom changed his strategy, and instead of trying to trade or time Bitcoin, he decided to accumulate it steadily like a savings account. And one smart way he did that was by investing in a Bitcoin miner. Think of Bitcoin mining like digital gold mining. During the California gold rush of 1849, some prospectors struck it rich, finding gold. But the people who consistently made money, they were often the ones selling the pickaxes, shovels, and supplies to the miners. Bitcoin mining combines both of these approaches. Your mining equipment, the modern equivalent of a pickaxe, helps validate transactions and secure the Bitcoin network. And in return, you get paid in Bitcoin directly from the protocol itself. It's like having a machine that produces gold daily, except the gold is Bitcoin. And instead of backbreaking physical labor, your machine runs on electricity and sophisticated computing power. The beauty of mining is that it gives you a way to accumulate Bitcoin systematically, regardless of market conditions. Every day, your operation generates Bitcoin in bull markets and bear markets alike. This approach removes the psychological pressure of trying to time your purchases. Instead of agonizing over, is today a good day to buy? You're consistently stacking Satoshis, which are the smallest units of Bitcoin, through your mining operation. I know what you're thinking. Bitcoin has already gone up so much. Can it really go higher? Well, consider these developments. BlackRock, the world's largest asset manager with over $9 trillion under management, created a Bitcoin ETF in early 2024 alongside 16 others. And collectively, those ETFs hold over $100 billion worth of Bitcoin. This is the same company that once called Bitcoin an index of money laundering. Major corporations like MicroStrategy, Tesla, and Square have added Bitcoin to their corporate treasuries as a hedge against inflation and currency debasement. El Salvador even made Bitcoin legal tender in 2021. And several other countries are considering similar moves. And most recently, the United States government established a strategic Bitcoin reserve, essentially a digital Fort Knox, holding approximately 1% of all the Bitcoin that will ever exist. And these aren't fringe players. These are major institutions and governments that are recognizing Bitcoin's potential. Now, factor in Bitcoin's fundamental scarcity. There will only ever be 21 million Bitcoin, and over 19 million have already been mined. Every 4 years, the halving event cuts the new supply issuance rate in half. effectively making Bitcoin twice as scarce. The last halving happened in 2024, which historically has preceded major bull runs about a year later. And when you combine increasing institutional adoption with Bitcoin's engineered scarcity, the supply-demand equation points strongly in one direction. Think about it. What happens when billions of dollars of institutional capital try to enter a market with a fixed supply? This brings us back to mining and why it could be your financial lifeboat in the 2020s. Mining Bitcoin is like dollar cost averaging on autopilot. Instead of trying to time your entry perfectly, you're acquiring Bitcoin consistently, day after day. But it gets better. Mining has a powerful compounding effect. Let's say you start mining today and earn 0.1 Bitcoin over the next year. At a price of approximately $100,000, that's worth $10,000. But what if Bitcoin reaches $200,000 in the next year or two, as many analysts predict? Suddenly, that same 0.1 Bitcoin becomes worth $20,000, and your mining operation is still continuing to produce more. In other words, the Bitcoin that you mine today could multiply in value as adoption grows. This creates a powerful flywheel effect that traditional investments can't match. Professional Bitcoin miners understand this dynamic. Their strategy isn't to maximize short-term profits, it's to accumulate as much Bitcoin as possible and hold on to it for the long term. During the 2021 bull run, miners who followed this strategy often ended up with significantly more wealth than those who tried to actively trade the market. Beyond its growth potential, Bitcoin serves another crucial function, which is financial insurance against global economic turmoil. We're living in unprecedented times. Global debt has reached historic highs. Central banks have printed trillions of dollars, euros, and yen to prop up the economy since 2020. History teaches us that unlimited money printing eventually leads to currency devaluation. Look at Turkey, Argentina, Lebanon, or Venezuela for recent examples. And it's transparent because anybody can verify the exact supply and all of the transactions on the blockchain. This makes Bitcoin the perfect hedge against monetary debasement. It's like digital gold that you can transfer anywhere in the world in minutes. For people in countries with unstable currencies, Bitcoin isn't just an investment, it's a financial lifeline. We've seen this in Argentina, where many citizens convert their pesos to Bitcoin to preserve their purchasing power. Even for those in more stable economies like the US or the EU, Bitcoin offers important diversification from traditional financial systems that are increasingly interconnected and fragile. Mining gives you an active role in this new financial system. When your mining operation helps validate a block of transactions, you're directly contributing to the security and functionality of a global monetary network. That's incredible when you think about it. Now let's be completely transparent. Bitcoin mining isn't a risk-free endeavor. There are costs involved: the mining equipment, electricity, hosting fees, and maintenance expenses. Bitcoin's price volatility means that your mining revenue can fluctuate from month to month. As more miners join the network, the competition increases, which can affect your relative share of the rewards. However, with the right approach, efficient machines, low-cost electricity, professional management, and most importantly, a long-term mindset, mining can be highly rewarding. The mistake that many beginners make is focusing too much on short-term profitability. They panic when Bitcoin prices drop or when difficulty increases, sometimes selling their equipment or their coins at a loss. This is precisely the wrong approach. Mining is a long-term strategy. The most successful miners understand that bear markets are exactly when you want to be accumulating Bitcoin, when prices are low and before the next cycle begins. Think of your mining operation like a Bitcoin production factory. You wouldn't shut down a profitable factory just because the product price temporarily decreased. We're living through a digital gold rush. Bitcoin represents both the gold being discovered and the infrastructure of this new financial frontier. Buying Bitcoin directly gives you immediate exposure to its price. Mining Bitcoin gives you ongoing production and a stake in the network itself. Having both in your portfolio creates a powerful synergy. As we navigate the economic uncertainties of the 2020s, whether it's inflation, currency realignments, or technological disruption, Bitcoin offers a unique combination of growth potential and financial insurance. If you're intrigued by this perspective, I encourage you to like and subscribe to our channel. I regularly explore big ideas in finance and technology to help you stay ahead of the curve. So drop a comment below. Are you team Bitcoin to the moon, or are you still skeptical? I'd love to hear your thoughts. And if you're curious about mining as a way to participate in the Bitcoin revolution, we at Abundant Minds have helped hundreds of investors get started with professional mining operations. We handle all of the technical complexities and logistics, allowing you to focus on building your Bitcoin position. Interested in learning more? Then book a consultation using the link below. We'll discuss your financial goals and see if mining makes sense for your situation. No pressure, just information. Don't watch the next decade's financial revolution from the sideline. The opportunity is here now. The question is, will you seize it?